Good morning, friends. It's been a little bit here, but we are back. I am here with Brian. Brian, why don't you take it away?
Absolutely. Great to see you, Trav. We are here with a special This Week in Crypto, where we're going to go over everything that has happened during this historic week of crypto. Our normal team is traveling right now, and I've got Trav from Web3 Matters, who I think, Trav, we have not spoken on a call like this in maybe a month and a half now, right?
Which is crazy to think about, man. We've been getting pretty consistent on these calls now then for a while, but I mean, everyone knows how life is. All that to say, it's so awesome to be back here with you, Brian. I always enjoy our conversations here and really looking forward to diving into everything that's been happening because it's been a crazy month and a half. Wouldn't you agree?
Yeah, man. It's obviously no one can deny when we have an all-time high. There's no shortage of things to talk about, and I can't wait to hear your take on it. You always provide some wonderful news that maybe isn't quite on Santiment's radar all the time. So, getting both of our perspectives, mine from the data end and yours more from the news and the fundamental end, I think it's a perfect combo. So I hope that our audience here appreciates it.
Excellent, Brian. Well, hey, I'm sure they will. We're already getting some good love in the comments here, so excellent. Really happy to have you all. And I think the best way to proceed is just to jump right in there, Brian. So why don't you take it away, and then we can just kind of go back and forth on what we see, how we interpret it, and what it all might mean.
Definitely. So I'm gonna pop on my screen now. Let me know if this is showing up okay for you.
Crystal clear, my friend.
Perfect. So this is for those unfamiliar with Santiment. We're basically an on-chain and social and development activity provider. We have the most comprehensive, large-scale data of any platform in crypto, and our job is to provide you with information to make it easier to navigate what's going on and really see what's actually going on behind the curtains of these thousands and thousands of assets. In total, we've got over 3,500 cryptocurrencies that we track, and there's hundreds of different charts, and tables, and indicators that you can find for all of them. And this is kind of my home base here, where I can look at the change over the past day or past week or past 30 days in social volume or price, or just see a general overview of how market cap or volume has changed. So not shocking at all here to see that everything or the majority of things are looking up in terms of price. And then social volume wise, also not surprising to see about a 39% increase in discussion rate for the top asset in crypto as it made a new all-time high, getting a little over 93.7 or 93.4, I should say, as the current new all-time high just a couple days ago. Ethereum also seeing a lot of extra discussion, but look here at like Pepe, Dogecoin seeing about a 249% increase in discussion. Not shocking at all, because Doge is up 181% in market cap over the past 30 days. Just a massive, massive jump.
That's absolutely
Yeah, go ahead.
incredible. Sorry. Yeah, the one thing about this cycle that I think is absolutely blowing my mind is how much the meme coins have been outperforming the market every step of the way. Like usually
Yeah.
we see different phases of the cycles where, Bitcoin pumps, then meme coins are kind of taking a bit of a sideline. But all throughout the past several months, meme coins have just been skyrocketing. So it's pretty wild to see, while we have Bitcoin making new all-time highs, up about 20 to 30% over the last couple of weeks. We have something like Dogecoin that's up over 120%. Absolutely
Right.
crazy.
It's insane. Yeah. And, the reason I started with the 30-day view rather than our normal This Week in Crypto weekly view is because we have this asset, Peanut, the latest meme coin to hit the block, up 1,450% over the
Oh
past
my
week.
goodness. And of
Just
course, for
ridiculous.
For
Yeah.
anyone who doesn't know Peanut, that's the whole squirrel saga, if I'm not mistaken here. There's that all that drama about that influencer who rescued a squirrel and then the government came in, euthanized him. There's a whole thing behind it, but yeah, that was a narrative that absolutely took off, and that is wild to see. That not only did it skyrocket 1,400%, but it's holding out that level pretty strongly as well, which is mind blowing. It seems like there's some substance there.
Yeah, it seems like that for sure. It has such a following right now, mostly because of the initial run up from November 12th, and a bunch of people have kind of latched on here, and we've got all sorts of diamond hand narratives that we saw a la GameStop back in 2021, for those who remember. So it's a fascinating development. Normally, we give a little bit of warning, and we will talk about this more during the call, but when the social narrative is so heavily skewed toward meme coins rather than layer ones and layer twos, it can be a bit of a caution flag because it's indicative of crowd greed. And Trav, based on our previous calls, we really believe strongly in markets going the opposite direction of the crowd's expectation. So if the crowd is basically saying, oh, it doesn't even matter what I invest in now, let me jump on Peanut the squirrel, right, and Pepe and all these other things, regardless of your belief in them and what they contribute to the crypto ecosystem, it's generally considered to be a sign of kind of a retail pump once you get to the point where it's all speculative assets that are getting the most limelight and the most price increases.
Oh, 100%. That's it. There's a huge part of market cycle theory involved that I can go on and on for hours here. But essentially, when you see retail actually propelling the moves, that's usually very, very late stage in the price action. And it's not long after that where, you see those massive dips. Market likes to punish greed here. And we see that time and time again. And of course, Santiment's data helps support that in a very tangible way here. So that definitely is a bit of a warning sign. I will not personally, no financial advice, be investing in Peanut at this stage of the game. I could be very wrong, but based on my own trading thesis and the data that I've seen, may not be the best move for myself anyways. Back to you there, Brian.
Yeah, that's well said. I mean, look, you can invest in any meme coin or any asset you'd like in crypto. It's just all about risk, and understand that if you are going to invest in a meme coin, especially one that's up 15x, 16x over the past week alone, you're doing so basically hoping that the crowd continues to push things higher for you. Those market caps are growing for a reason, and it's relying on other people buying while the average returns are already so skyrocketed for that asset. So you're at the mercy of the crowd when it comes to a speculative asset, whereas if you were to invest in Bitcoin and Ethereum, you at least have real world justification and mass adoption to rely on, or partnerships with major companies. Development is actually happening for those layer ones and layer twos, where you're almost never seeing real development for Dogecoin and the hundreds, if not thousands, of meme coins that are being traded on a daily basis. But the reason I pulled this chart up is it shows the fluctuations between social volumes of the top 6 layer ones, top 6 layer twos, and top 6 meme coins. And we can see right here on the 12th and 13th, we really started to see a peak in discussion rate for meme coins. And very shortly after that, basically the past day and a half, we saw a little bit of a retrace. That's not a coincidence. We almost always see, even on these mini spikes right here, back on September 26th, there was a correction right after we had a meme coin social dominant spike. On the October 18th, we saw the same thing until meme coin discussion rate and hype kind of dropped down. And now we see the largest version of it. This is the biggest social volume combined for the top 6 we've ever seen in the course of history. And not a shocker to see that we see a retrace. So there is a bit of an inverse correlation between meme coin hype and Bitcoin / crypto's overall market caps going up. So you don't want to be rooting for everyone's attention span to be focused on memes rather than layer 1s and 2s.
Gotcha. No, there's so much there that I'm so glad that you brought to the table today. The first, of course, being the idea of utility, the idea of more established blue chip coins. The metaphor that I heard from one of my mentors back in the day is, as opposed to meme coins, when you have things like Bitcoin or Ethereum, very well established blue chip tokens, with lots of like very informed liquidity behind it. It moves more like a cruise ship. It takes a long time to slow down, and then a long time to kind of reverse and then pick whatever direction it needs to be, as opposed to something like a meme coin, where it is basically as volatile as you can get it. Massive spikes up and down, no warning. So I'm really glad that you're kind of bringing this warning to anyone who's, really focusing a lot of their attention on meme coins. And I think something like this, where we see record height in social chatter, is a pretty strong signal that shouldn't be ignored. And mind if I just ask for a little bit of clarification here, Brian? When it comes
Please.
to that chart that you had just showed, that was just chatter. I know also on sentiment you have like positive sentiment versus negative sentiment versus weighted sentiment. Is this just kind of all of the chatter in one metric, or is it? Yeah. Okay.
Yeah, that's exactly right. That's just straight up discussion. It's a good idea. I could work on a template where we can actually compare the positive versus negative sentiment ratio, like I'm showing here for Bitcoin, and use that as a sector comparison. And maybe when we next talk, I'll have that created and we can look at how that is differing from just the overall discussion rate. But yeah, the previous chart I was showing is just straight up the ratio. I'm sorry, the overall discussion rate of the different sectors compared to each other, and how meme coins took off in the narrative focus of the crowd over the past week.
I love it. Okay. No, and again, very telling, very I wouldn't quite go to the word definitive, because nothing, of course, is certain in this space, and especially when it comes to data and metrics. But it certainly is supported by the odds that when you do have massive spikes in chatter, often you see proceeding dips in price here. So maybe we can just take a quick pause there, Brian, and to all the people who are actually watching our stream right now, I just kind of want to give everyone an idea of what else they can expect from today, because we have a lot of really exciting metrics to talk about, a lot of very time tested and proven to a certain extent, highly supported metrics that have in the past really helped me personally guide my trading ideas, but then also all users of sentiment. So do you want to just kind of give people a sneak peek on what else they can expect for the rest of our stream today, Brian?
Yeah, so we're going to talk a little bit about Bitcoin's fundamentals and its on-chain activity and social activity, to get an idea of whether this historic rally that we're on is going to continue. We'll also look at some of the social trends to see which subjects and which specific coins are getting the biggest hype right now, to understand exactly what topics are driving narratives at the moment. And just kind of getting an overall vibe of how sentiment is focused, to understand whether we're hitting that euphoria that is usually a bit of a warning sign, or whether it's actually pretty modest and there's a little bit of fear, and retail traders are kind of trying to time the top and sell right now with the expectation it drops back down and then they buy later, right? So we want to see a lot of fear happening if we're rooting for prices to continue going up, like most of you are. And we don't want to see a lot of euphoria, because that's going to signal that whales can easily dump and then buy back in themselves after the retail traders flee for the hills.
Perfect. And I'm so glad that you summarized it like that. a question that came to mind that I've been asked by a bunch of my community members has been, why is it important to understand what sentiment is about specific coins? Why is it important to know which tokens are most talked about?
Yeah.
And it's exactly that. The ones that are getting the most attention, the ones that are the most hype, often see reversals in the very near future from that. So appreciate you taking the time to do that there, Brian. And I'm looking forward to getting back into some data here.
Yeah, definitely. And sentiment is huge, by the way. It's not just for like fascination and data reporting. It's half the equation in crypto. We really see two reasons why crypto markets go up and down. One is whale and shark accumulation. When they pump their bags, prices tend to follow because more money and market cap is coming in at a significant rate. And that's the whole thing that's driving up prices. The other half is retail traders and their perception of the markets. So the smaller traders are the ones who are feeding the whale and shark bags, and they're, buying when Bitcoin goes above 90K, and then it starts to peter out. And then they're selling when, Bitcoin goes to 50K, or like they sell right before, Bitcoin hits 17K and Sam Bankman-Fried is messing with markets. And then they buy after all of those retail traders basically sell their coins to them. So the whales and sharks are basically doing the opposite of what the retail traders are at any given time. And those are the two main things that are pumping markets. So looking at sentiment is like the blueprint to understand how the retail traders are doing. And we can understand what the correct opposite action is to take if you like making money. So
you had me at making money, my friend. and I hear you. I hear everyone who's watching right now. You're chomping at the bit to ask this question. I don't even need to see your comments to know that you are asking. Are we going to be able to see the whale behaviors right now? And the answer is yes. We will certainly be taking a looking at whales, seeing what they're up to get a complete picture of what exactly is pushing the markets right now, and get a good idea of maybe what's going to happen in the future here, Brian. So back to you, my friend, please.
So in just a couple of minutes, I'll show how the whales are behaving right now. And in short, it's good news. They're still accumulating and still moving in the right direction to justify further price increases. Doesn't mean it's going to happen immediately. We might still see some chopping here, but over the long term, you want to see whales accumulating, which they are. I also wanted to briefly point on development activity to cap off that meme coin subject because it's so pertinent right now. This is what the top 10 leaders look like in terms of notable GitHub events per day. You can see Chainlink, Internet Computer, Hedera, Cardano, Optimism, Polkadot, Kusama, Starknet, ZK Sync, and Aptos as the top 10 developing assets in crypto. That's great. Now, if we look at meme coins, these are the development activities. 0.666 per day, 0.566 per day, and then a whole bunch of zeros. So literally the only two meme coins, at least on our top 50 list right now, they have zero development. There is no work being done on them at all. And this always shocks people when we show this because they assume every coin, once it gets some traction, like they must have some dedicated teams. Well, the whole point of meme coins is it's, usually it's built by some random person, maybe every once in a while a group of people, but usually just one person who doesn't know much about development, but they know memes and they know what would be funny and get a rise out of people. And they launch it, and suddenly you have big investors who actually want to buy it because they think it would be funny, or they think they could make money by kind of forming trading groups around that coin. And suddenly they're pumping prices, but the development and the innovation and improvements aren't really coming in from meme coins. The meme coins are kind of just there because, well, they're memes. So keep that in mind when it comes to long-term investing. Dogecoin may be, a coin that's been around for a little more than 5 years now. But it's kind of the exception to the rule. Most of these coins have kind of short-term bursts. Sometimes it might be a week, sometimes a few months, sometimes even over a year, but eventually they kind of fizzle out and you never hear from them again. So that's why they're pure gambles. And I just wanted to make that point.
It's so just entertaining to see, because it's part of the what defines a meme coin is no utility. And it's a conversation I've had on a lot of spaces. There's actually a couple of different projects now that claim to be meme coins that are actually building a lot of benefit for the holders, and there's like a dedicated team behind it. So it's interesting. At what point do you actually quantify a token as a meme coin if there is utility? Anyways, not a topic for today's discussion, but it's all that to kind of summarize that it's pretty funny. It's pretty funny to me to see the numbers that show there is very much no efforts being put into improving these tokens or building any sort of utility underneath them, yet they hold so much liquidity in this market.
And I don't doubt, by the way, that there can be utility. Just because they're not developing doesn't mean that the current coin as it stands can't be used for something. If some large company just decides they want to run off of Dogecoin transactions, they can make that happen. But the coins that are generally having dedicated teams behind them are the ones that generally are going to be more sustainable. So like going back to this top 10 here of actual largest developers, these coins are almost all in the top 100 market cap. That's not a coincidence. They didn't start there, but through having large development over time, they tend to rise to the top. And you see, over a span of months or years, most of the coins that are seeing some of the most dedicated coders behind them leapfrogging over some of the other coins that aren't getting as much innovation and improvement. So it's almost like a vote of confidence. And whales look at this kind of stuff and they decide, okay, Chainlink is just crushing it with a dedicated team and they're constantly updating on what they're working on social media. I'm going to invest in them because I really like what they're trying to do. And if nothing else, it's a sign that you're not investing in something that is a rug pull, right? A dedicated team is not going to put in 828 new GitHub events per day if they're planning to rug pull their audience. Generally speaking, I'm sure there have been exceptions before, but it's rare. So generally speaking, this is why a lot of people care about that.
100%. And just a quick sidebar shout out to the Chainlink team. I've had the opportunity to have some conversations with them on live streams before, and they are just putting in the work in so many areas. It's pretty incredible. I know there's a team working to kind of integrate the Metis layer 2 and Chainlink to leverage the decentralized sequencer node. Again, topic for a whole other conversation. Just wanted to give a shout out to the Chainlink team and some respect for the teams out there that are putting in the work, regardless.
That's awesome. Yeah. Thanks for sharing that. I would love to meet some of these teams at some point. But a quick transition here. So we mentioned sentiment a little bit, and a lot of you were wondering, what's the overall feeling from the retail crowd? And it's actually good news. We're not seeing a significant amount of euphoria despite this huge climb. And the theory that I think a lot of us at Santiment have is this just caught a ton of people off guard. There were a lot of people that were kind of taking profit or just not really in much of a bullish mood at the beginning of November. And this initial climb where we went from, 69K to about 75 for that new all-time high right after Donald Trump was elected. It actually happened like during the poly market stuff where, by the way, the founder's now being investigated by the FBI. I don't know if you saw that, Trav, but that's a crazy story. But they predicted correctly that Donald Trump would be president before it was actually official, like 3 hours before. And the markets were already going nuts, and we eventually made an all-time high pretty much right before the media and news outlets officially called it. So that was the initial all-time high. There was a bunch of euphoria over Trump being elected because it's no secret that the crypto community is pro-Trump. He's been more vocal about his pro-crypto stance than Kamala Harris was. So people were very excited about that. And then the euphoria kind of quickly calmed down. We had a little bit of bullishness, just to draw a line here to make it a little easier. Right about here, just to eyeball, that's about the midway point. So anything above that is pretty bullish. Anything below is a little more on the bearish side compared to normal. And then anything about right there, that's euphoria. So this is what you don't want to see. When the pink line gets above that, that's about the point in which we typically are going to see a little more risk of a correction. We saw a very good example of that here. This was not a good example because I think this was more of a news-related euphoric reaction rather than crypto itself. So we actually continued climbing. We got more in the middle range on the 10th and 11th, and then we actually fell below. And I find this a little surprising. I don't think the crypto crowd believes in this pump. I think they never expected it to go above 90K. And most are just going, oh man, I really hope prices go back down so I can buy somewhere in like the low 80s or high 70s, and then I can actually get some positive returns. That's a good sign. When we see the crowd talking about how they're waiting for a lower price so they can invest in this thing that they believe in, usually that lower price never comes, and they find themselves kicking themselves as prices continue to go up and up and up. So what I'd be looking at now is whether or not we start to see another tease toward 93K for another all-time high. May not happen today or in the next few days. Maybe it happens in the next couple weeks. And if it does start to tease that, I would expect that the euphoria starts to come back, and that same crowd that doesn't quite want to invest yet, they start to jump back in and go, oh man, I'm not going to make that mistake again. I want to at least make a little money before it hits 100K, right? So if they start to get really euphoric again, then we see a bit more of a sizable correction. But for now, the retail crowd is not really a believer in this huge pump, which means prices can pump even more without much resistance. And that would transition over to what the whales are doing, one of my favorite charts on Santiment. And
I was just about to say, because you teased earlier that the whales are accumulating, I think this seems like it's
totally
a perfect storm in a sense for another bit of a push up.
Yeah,
wow,
and I certainly was not making it up. Like, this is what the typical rate of growth looks like. We'll just draw a line like something like that, right? That's kind of the typical accumulation rate for these whales. And this is whales and sharks, by the way. This is any wallet that holds 10 or more BTC. So when the collective amount of coins is moving up from this group, good things tend to happen for crypto. Yes, there was a lot of price chopping, as you can see from these green bars representing the price. But long term, we typically see the bull cycles come eventually, as long as whales and sharks are moving in the right direction. So all of a sudden in mid-October, this was about 3 weeks before the election happened, we then see a huge increase in accumulation, and it really has not stopped even after the election came in. And over just the past week, if we go from the close of November 7th to the close of November 14th, today's the 15th, we're recording, so we'll have another block of data come in at the end of today. But there has been an accumulation of about 28.5K more BTC just in the past week. And that's a huge increase. That's just to calculate that, if we add some zeros, I think that's around what, 285 million or 2.85 billion, something like that. It's an insane amount of new money coming in. So this is what you'd want to see. The smart money, the key stakeholders, continue to add to their bags with the expectation that prices grow further. So with that combination, the combination of this, whales accumulating along with the retail crowd being non-believers, I think it's a recipe for good things to come. It doesn't mean, once again, that it's going to be immediate, but if this same scenario continues, I would be shocked if we see a massive retrace. It could be enough of a retrace to scare the retail traders a little more, because we have been on such a huge pump. But if we just see a little bit of a retrace that gets them even more scared while whales keep doing this, I would be pretty surprised if we don't make another run at the all-time high very soon.
Incredible. It's so amazing to see, to see this actually in my face, to see that whales are accumulating, to see that people are feeling very tenuous about the market and fearful, or maybe even feeling a little bit of that FOMO, but just having that general sense being a little bit more on the negative side. To actually see that represented on a graph right in front of my face, I don't know, that just speaks to a very content part of my brain as we go through this year. Brian, real quick here before I forget this thought, there was one indicator. I remember you showed this to me on one of our first streams together, and I can never remember what it's called, but essentially it's one of the ones where you zoom way out and you can see it's a very gradual curve that kind of goes up and down. That kind of indicates overall mean dollar invested age.
Yep.
There it is. Yes. I'd be super curious to see what that one's looking like right now.
Yeah, great memory, Trav. This is definitely one of our low-key best indicators on the platform. It doesn't always get the hype from our audience, but from a long-term perspective, it's huge. The way this works is it's measuring the average age of which coins have been sitting in respective wallets throughout Bitcoin's network over time. And the general rule of thumb is when the curve is moving down, it's justification that we're in a bull market. If it's moving flat or kind of moving up gradually like this, it means we're seeing more inconsistency and anything can happen. But when you see an up move in price while the mean dollar invested age curve is going down, that means that a bunch of dormant coins, especially from big wallets, are being flown back into circulation for retail and exchanges to be able to circulate at an increased rate. And in short, you want to see as many coins as possible moving out of those old wallets and into circulation, which can therefore enhance and improve the amount of network activity going on. So this was a perfect example of a bull market. This was during the early stage of COVID back in late 2020. And we had that huge run up to, I think it got up to 63K, maybe 64, something like that. Then we had a bit of a drop. And you can already see that the mean dollar invested age here, this yellow line, is moving up. And then we had this secondary all-time high where we got up to like 68 or so. And at Sentiment, we were watching this going, this doesn't feel like it's going to last. This feels like a bit of a fool's gold second rally that's getting retail really excited. And there were already a lot of people calling 100K back here, but the mean dollar invested age line was going up and up and up. So Sentiment was kind of warning, this doesn't feel very authentic back here. We have a ton of posts about how this looks toppy. And all of a sudden we see this huge collapse and people get burned. There were tons of huge losers and people who were longing and sadly even leveraged longing up here as mean dollar invested age was showing that the coins were just sitting and not being circulated from these whales back into circulation. So we kept on climbing this mean dollar invested age line all the way until about October 2023. And if you guys remember, right around the middle end of October, that's when that huge bull cycle started. Tons of people made a a lot of money between October and that eventual then all-time high on March 14th, where the price of Bitcoin went up just roughly about 150, 160%. And during that time, you can see how the mean dollar invested age line really started to drop again. And then eventually, around early April, it started to chop. You can see this yellow line. It actually started going up here in August. And then right around late September, it starts to go down again. So this is a very good sign. Roughly a month and a half ago, we start to see a downturn in mean dollar invested age, indicating a lot of dormant coins coming back into circulation again. Now, this tells me that we're justified to be seeing this pump right now. It might be a little bit too early to say this is about to be like a 6-month, 1 year long bull market, just like we saw in, late 2020 when that was getting started. But I think if this continues, this trend of mean dollar invested age going down as prices kind of stay where they're at or start to climb again, it's another sign of confidence that this wasn't a fool's rally and not a bull trap like a lot of people are fearful of. So great point on checking this metric out. I wasn't planning on showing it today, but right now it's showing a nice glimpse of good news, in my opinion.
No, that's really exciting to see. And so far, that's 3 for 3 metrics that we've looked at that are all relatively bullish from what I'm seeing here. So I appreciate you taking the time to show this. Now, I definitely don't want to take you too much off track here, but apparently I have a telekinetic connection with our audience. And that point that you made a couple of minutes ago about how the top of the second peak of the 2021 bull run, how there were a lot of people actually going long at that top, and there were huge amounts of liquidations. One thing that I do know is that through sentiment, you are also able to determine how long or how short people are leveraged in any specific moment, and how that's also a very powerful signal to look at. So maybe we can, if you feel like taking a look at that now, or if you feel like putting a pin on it, that's certainly something I'd be interested to see. Because I know I've actually had some success in shorter term trades simply by taking a look at the funding rates here, which of course is basically, how another indication of kind of greed and fear, how bullish or how bearish are leverage traders on the market now.
Yeah. Let's check that out. And this is public info, by the way, that exchanges release. All we do at Santiment is aggregate stuff like funding rate and open interest. And in general, what you want to see are a lot of shorts going on. This is like a pure counter indicator where you want to be buying when other people are opening up leveraged and margin trades, betting against the price of Bitcoin or whatever coin you're looking at. And you can see that's exactly what happened during the Black Thursday initial week or so, from March 11th to 18th or so. Huge red bar here indicating people are expecting prices to go even lower than I believe it got all the way down to 3,600-ish. Crazy to look back at where prices were back then, because Bitcoin's gone up about 1,600% since Black Thursday now. But yeah, the shorting bar here was the sign that Bitcoin can go up with very little resistance while everyone is freaking out about, very justified reasons that were happening in the world at that time. But obviously, in hindsight, we know that crypto really thrived during the pandemic. And as prices really started to skyrocket here in early 2021, notice how that red bar transitioned to huge green bars, the biggest we've ever seen on the platform, at least over the past 5 years when we started getting data for it. These are indicative of people overwhelmingly opening longs while abandoning shorts. And this was a sign we were getting overheated. It actually happened a lot on the first run up. This was in early 2021, and this was the second run up in late 2021. And even though funding rates weren't as big on the latter half, as they were on the first half of 2021, it was still, these were still massive longs. And you can see it was kind of comparable to the early 2024 top that we saw in terms of funding rate here. So in short, you don't want to be longing too much yourself when funding rates are indicating that that's what everyone's already doing. The other thing that's interesting is the open interest that was happening. So this is indicating the amount of just overall positions that are margin or leverage types of positions on exchanges. And it's including all the exchanges that we have data on. I think we have somewhere between 20 and 30 of the largest that we track. And we saw this sudden huge open interest spike in 2022. And I think in hindsight, this had a lot to do with FTX and screwing around with manipulating crypto at that time. But there were a lot of reasons that people were kind of very polarized as there was this huge downturn throughout 2022, which was kind of the year from hell for a lot of crypto traders. They lost a lot of money. So open interest kind of happened here, especially when people tried to long. They just got liquidated immediately by these just continuous downturns. And then since mid 2022, there have been more and more people that are opening either longs or shorts. But we can tell from these bars that it's still going to be mostly longs. And we just over the past week or so started to see a little bit more longing going on. I'll just hide the other two things for a moment. So this is the past week. It's starting to get a little high. I'd like to see this stay at about this neutral level, right about that line. When it's above, it means there's a little bit of even with sentiment being pretty dull right now and a lot of non-believers on exchanges, there's still quite a bit of longing going on, indicating maybe just an ounce of greed that we'd need to worry about. And hopefully this maybe goes away so that we can start to really pump again without much resistance or traders, opening up 10x or 100x leverage longs while it's going on.
Makes a ton of sense. And also something that I'm noticing is the relativity in the size of bars when you're in a bull run versus a bear run. When you're in a bull run, it really doesn't need to get that bearish, the funding rates, to really indicate a bottom. Like if we look back to the most recent negative funding rate bars we see, they're just tiny. But that was a perfect signal for an upside reversal here. So definitely something that I will certainly be keeping my eye on, and also with you in the fact that I hope that funding rate cools down a little bit. And then, that's one more ingredient in this recipe for potential upside in the future.
Yeah, totally. And part of the reason those bars looked so short is just because that Black Thursday bar was so massive, it was skewing everything else. But yeah, like if you look at August, basically the month of early August to early September, you see quite a bit of shorting going on. And this was very indicative that the crowd was about to be liquidated, and those shorts would be able to act as rocket fuel to help prices surge quicker. And that's the advantage to longing while you see a lot of shorting going on exchanges. So yeah, really fun indicator to look at there.
Would you identify that as like a small short squeeze when you have so much shorts happening and then price liquidates them all and then they're forced to buy back into their positions, which then further adds rocket fuel to the price action?
Yeah, totally. It's not even them adding or buying back into their positions. They basically, all of the money that they put into shorts, it just gets liquidated. The exchange absorbs it, and that allows longers to get a premium on their longs. It's in the weeds a little bit, but in short, like the money that people put into shorts gets basically liquidated out of their accounts and benefits those that were longing to give them a faster course toward the result that the longers were hoping for.
Understood. Gotcha. No, I appreciate that clarification. That's something I always am a little bit uncertain about, and something I get confused a little bit with just like stock market longing and shorting positions,
Yeah,
not on leverage, where you actually have to sell a share to short it and then buy it back to close
right.
your position here. So that's an important distinction, but I guess the main takeaway that it still does have a very similar effect regardless of the mechanisms behind it.
Yeah, exactly. Very similar. Maybe on another video we can go over shorting and longing more, because it's a really fascinating uh, metric that I am constantly learning more about myself. But even if you don't know the exact mechanics behind it, it's still a very easy rule of thumb to um, understand that buying when you see a lot of red, and not necessarily selling, but being more cautious when you see a lot of green, uh, that tends to lead to good results for sure.
Perfect. Perfect. Excellent. So we have about, I'd say about 10 more minutes left for our stream there, Brian. And I've
Yeah,
hijacked our conversation several times now.
no,
So I
I
just
love it.
perfect. Perfect. I just want to make sure that you're able to kind of get all the important metrics and all the important features, give them some shine while we still have some time left. So I'll leave the direction to you, and wherever you'd like to take this, please feel free.
For sure. And feel free to interject again. I think we covered most of the main on-chain and socials that I wanted to show. For a final recap of the week, we can take a look at the trending words and trending coins. And XRP has been dominating the narrative over the past couple of days, due to mainly just a massive price surge that I think has been a long time coming for the XRP community. They're up about 47% over the past week, give or take. And there's a lot of speculation about the project getting a big boost from the possible resignation of Gary Gensler. This was someone that Donald Trump himself said he would nix from the SEC chair if and when he became elected president, which he now has been. And of course, his presidency doesn't start for another 2 months or so, a little under 2 months now. But I think the narrative now is that XRP is one of the key coins that will benefit from Gary Gensler being removed from this position. And we've seen in the price that being reflected. And you can see not only XRP at number one, but Gary and Gensler at number 2 and 3 respectively. So the entire topic is really dominating discussion rates right now, and these are some of the things that are really moving the markets.
That's awesome. And then just to add a little bit more context, because I think this is something that could have an effect for not just XRP, but for all tokens and especially a lot of the blue chips that have been under the SEC's targets for a while. Basically, it's from an outside perspective, from the research that I've personally done. So please take this with a grain of salt. It almost seemed that Gary Gensler, who was the head of the SEC, and of course the SEC, they're basically the financial police. They seemed to have had a campaign to squash crypto as much as possible. And they kept on putting restrictions and lawsuits and all of these different things, particularly on XRP. I think XRP was one of the most infamous cases, one of the most infamous legal battles between crypto versus the government, who is trying to obviously control crypto. So these new developments are huge, because not only did the SEC go after XRP, they went out after Bitcoin. They tried to quantify so many like very solid tokens as securities, which then comes with all these other regulatory powers that they could then impose on crypto. So I think this is a lot bigger than just the government versus XRP. I think this represents the government versus crypto. So having all of these things of the main guy from the government who seems to have a bone to pick with crypto potentially be having an exit strategy, that could be just quite bullish, not only for XRP but for crypto at large. So bit of a rant there,
Yeah.
but just
No, well said.
anyone who may not be fully informed of what's been happening here and why it's relevant, this is a pretty big deal. And me personally, never wish any harm to anyone, but this is a narrative that I'm happy to see going in this direction.
Yeah, I think that's a really nice recap, Trav. And Gary Gensler really has been kind of increasingly been perceived as the big super villain holding crypto back for the last couple of years. And with his likely removal from the SEC chair coming shortly, I think most of crypto is viewing this as a pretty positive sign. Whether or not it's true, whether or not they're getting it right, that Gary Gensler really was ever that big of a deal and the big Achilles heel to crypto, it's fair to say that may not even matter that much, because sometimes the crowd's perspective is all that matters. And if people that had been sitting on the sidelines because Gary Gensler was such a thorn in the side of crypto, if they see that he's resigning and are now putting more money into crypto, sometimes that's the only thing that matters, regardless of whether the crowd has been overinflating his impact or not, if that makes sense.
Absolute sense, kind of the chicken versus the egg argument.
Yeah.
But in crypto versus the government here. So that's fascinating. And one last quick sidebar that I won't put any more weight into is that the kind of the irony of the situation, because you can actually see on MIT's open source class material, Gary Gensler has all these different lectures on crypto. And in these lectures, he seems very pro crypto, and he's very informed and almost seems quite bullish on his stance on crypto as well. So it's just something that's very interesting to me, how someone who seems so informed and so bullish on crypto could then be so counter crypto on the grand scheme. So anyways, don't take my word for that. This is just, again, ramblings of a crypto degen here, but something that could also be worth a future discussion as well.
Yeah, that's fascinating. With crypto being anonymous as it is, you never know who is a secret investor or not. But conspiracy theories aside, I think the crowd finds it to be pretty good news that he is on the outs. It appears so. On the second half of the top 10, I just wanted to mention RFK is in the news, as Trump has nominated him as the Secretary of Health and Human Services. Take that for what you will and how much impact that will have on crypto. I know these are more politically based keywords that are in the news a lot lately, but it's interesting to see him making the top 10 among crypto discussions right now. Friday, it appears it's just a general celebration about the end of the week and speculation on what prices will do today. Pepe, which has been one of the biggest gainers, part of the meme coin crew like Dogecoin and Bonk, that's just been on a tear. Buy, I find this interesting, a little concerning actually. We don't like to see keywords like buy or bullish or all-time high in the top 10, because it's indicative of euphoria and anticipation of price growth. We don't want the crowd anticipating that. We want the crowd to be anticipating dumps and scams and pullbacks and stuff like that. But it's at number 9. It's not a number 1 keyword. Just be a little aware that seems to be a narrative that's forming very recently. And then chair is another keyword related to Gary Gensler. So interesting, different scattered subjects among the top 10 right now. And quickly transitioning to the trending coins, I expect to see XRP. There it is. So XRP is the number 1 trending coin by a large margin. You can see its bar here just absolutely dwarfing everything else here. So you can even break down the positive versus neutral versus negative, where positive sentiment is at about 52%, neutral comments at about 18%, negative at about 30%. So that's interesting to see the breakdown there. And then it's just like meme coin central below that. Dogecoin,
Absolutely.
Pepe, Elon, which is Dogelon Mars, meme, Litecoin, not a meme coin. That's refreshing. It's been on a good run in the past 24 hours for those paying attention to the OG asset. And then more meme coins, Coin, Nux, and Peanut. And then Cardano, which is right up there with Litecoin and XRP right now as some of the best large cap assets out there at the moment.
Wild to see. It is very refreshing to see that there's actual substantial projects up there in this sea of meme coins. So no, that's awesome. And one thing I really appreciate about your platform is the actual breakdown of the sentiment. And like I can see just below that chart that you just took a look at, you actually have a almost like a sliding scale of, overall how the public, or I guess the public, the social media individuals, wherever you grab this data, how bullish or how bearish they are. And that's incredibly helpful with kind of determining where we would like to position ourselves as well here, kind of getting back to the initial topic that we discussed about kind of going counter to the masses sentiment, if you will, when it comes to crypto.
Mm-hmm. Yeah, shout out to Santiment's developers. I have not built any of this, but they do a great job of putting together meaningful information that's easy to digest. And our data scientist, Alex, we've got such a great team that is constantly trying to build what the crowd demands and make sure that the people have the best tools that they're demanding and expecting to make them make informed decisions at all times. So yeah, I definitely recommend anyone check out our social trends dashboard right here at the top of the screen. If you want to make an account yourself, go to our pricing page. It doesn't mean you need to pay anything, but you can do a 2-week free trial, see how it, resonates with you. And if you want to be a consistent member, you can then subscribe to be a Sandbase Pro member with our awesome community of pro traders. You've seen them. You've even done predictions on SanR before, Trav, which has been a lot of fun. And that's a great way to kind of see what our traders are doing at any given time using the tools that we just went over for the past hour on this stream here.
100%. No, just on a personal note here, I've been a Sandbase member for going on a year now, which is wild to think about. And then, of course, using SanR, where it's just leveled up my trading game for absolutely zero money, which has been absolutely incredible here. So huge respect to the Sandman team for all the work that you guys are doing here. Huge appreciation for you, Brian, for taking the time to connect with us, to really give us an honest, objective view into what's happening in the market and what we might be able to expect. And maybe before we wrap it up, Brian, can you just kind of summarize maybe in a short, however length of time, kind of summary you would like to deliver here, just on everything that we looked at and kind of your overall feeling of where we are and what we might expect to see in the near future. Of course, zero financial advice.
Yeah, definitely. And I want to hear your take too, but I'd be happy to go first. In short, I think, we said this when we were getting over 90K. There's going to be an event where there's a pullback because average trading returns have gotten so high and the momentum was so supernova for the first half of November in particular, or even going back to the second half of October. There had to be a retrace at some point. Some people think there's barely been a retrace, but actually this chopping has been very healthy for the markets. And we've already seen tons of retail traders jumping out just based on this very minor pullback. It doesn't mean we can't see more of a pullback. I wouldn't be shocked at all. But based on the overwhelmingly high amount of bullish signals that we're still seeing, especially with whale accumulation, I don't see too far of a pullback unless things change over the weekend and going into early next week. But as it stands now, things still look to be pretty healthy. And I wouldn't be surprised if we see 6-figure Bitcoin by the end of the year, if everything stays as it is currently.
Perfect analysis there, Brian. And we're not far off from each other. Pretty much actually the exact same thing. I'm definitely seeing, the momentum is here. So for the long term, I definitely see, continue holding of these levels, and then also further upside. That one whale metric was absolutely astounding. Seeing in the last month how there's an extra 25,000 Bitcoin being held by whales, which is astronomical when it comes to actual funds. So to kind of have a significant reversal with so many big wallets and investors holding that much Bitcoin seems very unlikely to me. The other indicators that we looked at, there were the funding rates, which were a tinge on the short to medium term bearish side. And then there was one other one. Sentiment was definitely in the bullish side of things. The mean dollar invested age was certainly very bullish as well. There was the trending word buy as well, which also kind of to me suggests we might see in the next couple of days, next maybe week, a bit more of a retracement, but I don't see it breaking any significant levels to the downside. And further than that, I can definitely see retesting, if not breaking, of the all-time highs for sure.
Yeah, great recap. It sounds like a lot more good than bad right now. Just be aware that we've been on a torrid pace as of late, and sometimes there has to be a bit of a regression to the mean, especially to shake out some of the weak hands who think that we have topped out. And so I'm excited to see how the next few weeks go, especially between now and the end of the year. It should be really fascinating because this has been a very profitable year for crypto traders and stock traders. And taxes are a thing too, right? There's going to be people who are being mindful of capital gains and how that's factored into their overall returns. So sometimes wealthy investors, when they have a huge year like they have, almost everyone has, if they've been holding throughout the year in either stocks or crypto, sometimes they'll take a little bit of profit. So it might be a little rocky for a little while, but overall the long term looks very strong, more strong than I thought it would be, to be honest. So exciting stuff.
Yeah, the exact shared sentiment, or excuse me. Wow, let me try that one more time. We share the exact same sentiment, which is ironic because we were looking at sentiment through sentiment. And I'm going to stop that train of thought right there because I'm I'm going to get out of control here. But Brian, I just want to thank you so much for hanging out with us today, for delivering this incredible analysis of what's been happening and what might happen. I want to thank everyone who's in our audience right now, who's been joining us for this conversation. Truly appreciate you and really hope that you were able to take some wisdom away from here. And for me personally, I hope everyone has a wonderful weekend. Be safe and always set your stop loss. So Brian, any final words?
Thanks for having me, Trav. Great to have you as a guest on our show. We'll have this on both of our channels. So if you're confused on this being a This Week in Crypto as well as a Web3 Matters video, understand that it's doubling as both today. And we're going to do more individual videos coming up. Make sure to subscribe to him. Web3 Matters is always putting out excellent stuff and great Twitter spaces, which I'll be a part of from time to time. And I'm excited to talk to many of you about the markets, either in our Santiment server or on Web3 Matters, wherever the case is. We appreciate you all supporting us, both of our respective platforms.
Excellent. No, very well said, Brian. And I appreciate that kind shout out. And just to everyone here who's with us right now, thank you so much. To everyone who will be watching this in the future, you're awesome and we appreciate you. And I'm always bad with ending these things because these conversations are always so wonderful here. But I will do so right now. Hope everyone has a wonderful weekend. Be safe, and we'll chat with you next time. Take care.